Well, hello everybody. Welcome and thank you to all of you for taking part in our the first, in fact, of our three-part series in ISSA 5000 in Focus. We're just going to wait for some others to join us, but I'll kick off to say that this series takes us through ISSA 5000 from engagement acceptance, assessing risks and designing and performing procedures, and finally to concluding and reporting. And each webinar includes an explanation of the relevant aspects of 5000 with some practical implementation insights. Now, today I'm presenting alongside Dan and Claire, and we also will have with us our experts Taylor, Susan, and Kazuko, and Sylvia from ISSA. If we could go to the next slide, please, Taylor. Perfect. So in this first webinar, we will be giving you an overview of 5000, followed by a dive into the foundational principles and concepts, including matters related to acceptance of the sustainability assurance engagement. Now, as we go through the topics, if you have any questions, please type them in the Q&A box during the presentation, and we will respond to as many as we can today. As we're here to explore the overarching principles, we won't be discussing the detailed workings of any particular firm's approach or methodology, though we do recognise that practical guidance can be developed from these broader discussions. So if we don't answer your question today, don't worry. We will still pick up the questions and pop them into our implementation FAQ hopper to be addressed at a later date. And if we could move to the next slide, Taylor. Thank you.
Josephine, could I just suggest we hold for detail until more people join, because I see a lot of people are still coming online.
Just in the interest of time, Claire, we probably should pop on because we've got quite a lot to cover today. Okay, perfect. So I'm Josephine. I'm the Vice Chair of IAASB, and I also chair the Sustainability Assurance Task Force. I'm going to give you an overview of 5000, including its role in sustainability reporting ecosystem, its scope and applicability, as well as a bit of a look back to 3000. And then I'm going to hand over to Dan, who will talk about understanding the foundational principles and concepts, followed by Claire, who will cover our last session in this webinar, accepting a sustainability assurance engagement. If we could move to the next slide. Thank you. So some of you may have heard me say this before, but we can take a few lessons, of course, from the world of financial reporting in terms of the sustainability reporting ecosystem. And the most important is that trusted reporting should be built on that foundation of high quality sustainability reporting standards developed under a fully transparent due process. And that is really critical. And therefore, it has to be complemented by global assurance standards also developed under a fully transparent due process. And that would be supported by quality management and ethical and independence requirements, and overseen and empowered by regulatory authorities. Now, we need to pay attention to all components because failure to do so will reduce the quality of reporting and assurance, which risks, of course, undermining the trust and confidence of users. At the same time, the public interest is served by these components operating together to enable global consistency and comparability, encourage the development of professionals capable of producing high quality reporting and assurance services, and be unapologetic in its commitment to quality, rigor, and ethics. If we could move to the next slide. So 5000 is the overarching standard for sustainability assurance and the first of a new suite of international standards on sustainability assurance, allowing for future standards when needed in response to public interest needs. It is an authoritative standard developed under the same robust, independent due process as all of our standards are at the IAASB, with the oversight of our public interest oversight body and support of IOSCO and our other monitoring group members. As it is a standalone standard, it does not require reference to any other performance standards, such as ISSAs, but of course ISQM1 must be applied, or if another quality management standard is applied, then it must have requirements that are at least as demanding as ISQM1, and Dan will talk a little bit more about this later. Now, to claim compliance with ISA 5000, the practitioner must comply with all the relevant requirements of the standard. It's not an internal audit or consulting engagement or even a readiness assessment, which would not usually have a user other than the responsible party. Another thing to note, which you may have already seen in our August FAQ, is that 5,000 will apply to all assurance engagements on sustainability information once the standard becomes effective. So neither 3,000 or 3410 will be applicable from that point for sustainability assurance engagements. Now, there are some nuances, of course, in relation to jurisdictional adoption, and those are described in our FAQ. Important to remember that the effective date is, of course, periods beginning on or after December 15, 2026, or at a specific date on or after December 15, 2026. So if we could move to the next slide, please. So just as a reminder, because I imagine most of you are very familiar with this now, 5,000 can be applied to sustainability information prepared under any suitable reporting framework. It covers both limited and reasonable assurance engagement. It's available to any assurance practitioner, and it covers the entire assurance engagement and is scalable for assurance on specific sustainability information or a complete sustainability report. And that's in relation, of course, to any type of entity. It is principles-based and aligned with our other standards, including ISSA's and, of course, the Foundational Assurance Framework. If we could move to the next slide. Thank you. So as you saw from the previous slide, I just mentioned a number of standards were used as a starting point in the development of 5,000, including the auditing standards, which we wanted to make sure we reflected the more recent thinking of the board, and of course 3410 and 3000. However, other than in relation to greenhouse gas assurance engagements, 3000 has been used historically to perform sustainability assurance engagements, and we thought it might be useful to highlight some of the key differences as we transition from applying 3000 to 5000 in these engagements. Now, some key differences between 5,000 and 3,000 are the results of the consideration of matters on this slide. Now, I'm not going to cover these in detail here, as all of these topics are covered in more detail in our webinar series. But just to give you a flavour, there aren't any specific requirements for estimates and forward-looking information in 3000, and those reporting concepts are, of course, critical in sustainability reporting. However, as an umbrella standard that covers a wide variety of subject matter information and, of course, underlying subject matter, there was at least an acknowledgement in 3000 that the characteristics of those could include forward-looking information. So requirements in 5,000 for estimates brought in some of the latest thinking from ISA 540, our estimate standard, and ISA 3410 for greenhouse gas statements. Groups and the concept of value chain are not specifically addressed in 3000. Value chain components and sustainability information related to those is really a concept that's fairly unique to sustainability reporting. And so there wouldn't be a direct focus on those in 3000. Likewise, groups wasn't really addressed in 3000, but stakeholders considered group assurance engagements were important to cover for sustainability, and some of the principles were therefore brought in from our group audit standard without overwhelming 5,000 with requirements for groups, which would be disproportionate, of course, for a global baseline standard. If further detail is warranted, this may actually be dealt with in future standard setting in due course. Risk assessment and understanding controls. Although a risk assessment is not required in 3000, you still require a practitioner to apply what's called a risk lens, if you like, for limited assurance. So it requires an understanding of the subject matter and engagement circumstances to be able to identify areas where material misstatement of subject matter information is likely to arise. And then, of course, you design and perform procedures accordingly. In the development of 5,000, however, stakeholders concluded that a risk assessment should be required for a limited assurance engagement, in particular to narrow the range of assurance that might be obtained in a limited assurance engagement and to align with 3410 that already required a risk assessment for limited assurance engagements on greenhouse gas statements. That's, of course, now incorporated into 5,000 and covers all sustainability information. 5,000 is more prescriptive than 3,000 in relation to controls and is more closely aligned with 3410, although 3410 does not actually require an understanding of monitoring controls, which is required by 5,000. But there will be more about controls in webinar 2. So I'm going to move on to the engagement team. And again, key differences here is the focus on sufficient and appropriate involvement in the work of other individuals as the driver of when individuals from a firm other than a practitioner's firm are members of the engagement team or not. Now, if they're not a member of the engagement team in that circumstances, then they are another practitioner. 3,000 does include requirements for using the work of others, including practitioners, experts, and another practitioner and internal audit. These are more extensive, though, and we have more clarifications in 5,000. 3,000 included quite a bit of detail on experts, so there's less difference between the standards in that regard. And 5,000 also brings in the notion of using a one-to-many report on value chain information when engaging with another practitioner. That's similar to 3402 controls reports, which would be in respect, though, in this case, of sustainability information or related controls. In terms of connectivity, the connectivity to the financial statement auditor is briefly mentioned in 3000, but as sustainability information is often reported alongside the financial statements, we have included new application material encouraging communications with the entity's auditor for planning purposes and also at appropriate times during the assurance engagement. Communication is, of course, specifically required if the other information is materially inconsistent with the sustainability information or is materially misstated. But we're going to have more on this in webinar 3. Claire's going to cover work effort for preconditions today, so I won't cover it here, but there are some additional requirements in 5,000 that would be necessarily unique to sustainability engagements. In terms of materiality, 3,000 does require materiality to be considered, but 5,000 has a bifurcated approach. So we consider materiality for qualitative disclosures and determine it for quantitative disclosures. 5,000 introduces the concepts of the entity's process to identify the sustainability information to be reported. And this is related to materiality as it does require the consideration of the needs of intended users when identifying the topics to be reported. And of course, double materiality, which are both specific to sustainability information. But this is not to be confused, of course, with the practitioner's application of materiality. Another point to make is that both standards have quality management and relevant ethical requirements as those fundamental premises, but 5,000 has introduced the notion of an appropriate authority making a determination of what's known as at least as demanding, and Dan's going to cover that a little bit later. So actually that's it from me in terms of our overview and our transition for 3,000. I'm now going to hand over to Dan. Good morning, Dan.
Well, good morning. Thank you, Josephine, and hello, everyone. And Taylor, if we could move to the next slide. As Josephine mentioned, I'm going to talk about some of the key foundational principles and concepts in ISSA 5000. Obviously, there are quite a number, so this will be a fairly high-level flyby. But just to give you some background on some of these key principles and concepts. So if we could move to the next slide, Taylor. And we'll start with perhaps the most fundamental of the concepts, and that's sustainability matters, sustainability information, and disclosures. And I would point you to paragraphs 2 and 3 in the standard. Paragraph 18 in the standard includes all of the definitions. And also have a look at Appendix 1 in the standard, which is a very handy reference because it explains the relationship between sustainability matters, sustainability information, and disclosures. The IAASB recognized that it was important to have clear and understandable definitions that were framework neutral, but still reflective of the concepts embedded in various reporting frameworks. And we did coordinate very closely with IASB to make sure that the core concepts and definitions of sustainability matters and sustainability information were aligned. So just quickly on each of these three, on sustainability matters, it's a broad term that includes any matters related to sustainability. The core, obviously, is ESG, environmental, social, and governance matters. The IAASB explored other definitions, but stakeholders agreed that the acronym ESG was widely used and understood and would be an appropriate baseline for the core definition. But the board did recognize that the nature and scope of sustainability matters is evolving. So the definition also refers to other matters that may be addressed in law or regulation or relevant sustainability reporting frameworks or matters determined by the entity. It's important to remember that sustainability matters are driven by the criteria, and I'll talk a little bit more about that in a bit. The application material in the standard notes that law or regulation or the framework may define or describe sustainability matters in different ways and may refer to other concepts such as impacts, risks and opportunities, or dependencies. Sustainability information, in simplest terms, is information about sustainability matters. The criteria, again, determine the sustainability information to be reported, and the information is the outcome of measuring or evaluating the sustainability matters against the criteria. ISSA 5000 refers to different types of information as topics and aspects of topics. Now think about this in terms of categories of information. And the standard also provides examples of the types of information that may be required to be disclosed. You can look at paragraph A43 in the standard. The sustainability information to be reported, and when that term is used in the standard, it relates to the entirety of the information to be reported by the entity, and it's used primarily in the context of the preliminary knowledge obtained during engagement acceptance, and Claire will touch on that a little bit more later. So the term sustainability information, when it's used in the standard, generally refers to the information that is subject to assurance. And finally, disclosures. A disclosure is sustainability information about an aspect of a topic. In effect, the concept of a disclosure is simply a more granular way to refer to individual elements of the reported sustainability information. The example on the screen, disclosure could be metrics and KPIs about emissions. The disclosures can be in various forms, can be a single paragraph, a table, may cover multiple pages in a sustainability report, but how the entity presents disclosures is determined by the criteria. This concept of disclosures is relevant to planning and performing the engagement, including the notion of grouping disclosures, and will be explained further in the next webinar series. So if we can move to the next slide, please, Taylor. The concept of criteria is fundamental to all assurance engagements. Criteria, as defined, are the benchmarks used to measure or evaluate the sustainability matters. Criteria may be either framework criteria, entity developed, or a combination of both. Framework criteria can be either fair presentation or compliance criteria. Now, importantly, fair presentation and compliance criteria both require compliance with the requirements of the framework. That's the baseline. The only difference is that a fair presentation framework acknowledges that to achieve fair presentation, the preparer may need to provide information beyond what is required by the framework, or in extremely rare circumstances, depart from a requirement to achieve fair presentation. And a compliance framework or compliance criteria doesn't include such acknowledgments. That's all I'm going to say about fair presentation versus compliance for now, but we are aware that there's some confusion out there about the notion of fair presentation, and we're seeking to better understand these concerns. So Josephine, I don't know if there's anything that you would like to say now about what we're hearing about fair presentation.
Oh, yeah, thank you. Well, it's mainly just to point out that sometimes how presentation is described by some reporting frameworks may not necessarily directly align with our definition here. And so we're keeping a watch on that. And if we feel that there is some clarification needed, then we're certainly going to develop an FAQ to support practitioners in this area. Thank you, Dan.
Thank you for that, Josephine. So Taylor, let's move to the next slide then. And talk a little bit about the differences between limited and reasonable assurance. Josephine mentioned earlier that ISSA 5000 covers both limited and reasonable assurance engagements. In today's webinar, we will look at the fundamental differences between the two. We won't be talking today about the different requirements or the details of how the work effort may differ between the two levels of assurance, how the practitioner's risk assessment and work effort is impacted by whether it's a limited or reasonable assurance engagement will be explored in webinar number 2 next week. The first important point is, and that's shown at the bottom of this slide, is that the objective of any sustainability assurance engagement is to obtain sufficient appropriate evidence to express a conclusion designed to enhance the degree of confidence of the intended users about the sustainability information. In a reasonable assurance engagement, engagement risk is reduced to an acceptably low level in the circumstances of the engagement. Engagement risk, just as a reminder, is the risk that the practitioner expresses an inappropriate conclusion when the sustainability information is materially misstated. Now, in contrast, for a limited assurance engagement, engagement risk is reduced to a level that is acceptable in the circumstances of the engagement, but where that risk is greater than for a reasonable assurance engagement. Importantly, it still provides a meaningful level of assurance. And all of this is explained in the application material in the standard. And you also can have a look at the implementation guide to get a little bit more on that.
Dan, I was going to point out that I had actually mentioned earlier that our stakeholders, I'd also mentioned that our stakeholders concluded that a limited assurance engagement should be risk-based approach to narrow the range of assurance and, that may be obtained in limited assurance engagement and to align with 3410. But there was also another reason, and that was to smooth the transition where an entity moves from requesting limited assurance to reasonable assurance.
Yeah, thank you, Josephine. That's absolutely right. The stakeholders supported the risk-based approach that was used in ISAE 3410 because they felt it would provide a more appropriate basis for designing and performing further procedures for limited assurance engagements. And the IAASB agreed with that and was of the view that identifying and assessing risks of material misstatement, in this case at the disclosure level for limited assurance, would not only drive consistency and quality in sustainability assurance engagements, but would better facilitate the transition, as you mentioned, from limited to reasonable assurance in the future, because it really provides a more natural foundation for scaling procedures and for evidence gathering rather than having to redesign the entire engagement from scratch.
Yeah. Thank you.
Yep. And maybe just a couple of other points on this slide before we move on. Some other differences between limited and reasonable assurance to point out. I mentioned that the risk assessment for limited assurance is at the disclosure level. And the practitioner is required to obtain an understanding by inquiry of fewer internal control components. Procedures vary in nature and timing and are less in extent than reasonable assurance. There's also a notion of what we call the deep dive. If something comes to the practitioner's attention in performing the procedures, you can have a look at paragraph 148L in ISSA 5000. And the conclusion is expressed in the negative form. Nothing came to the practitioner's attention. Reasonable assurance, as you might expect, is just the opposite. The risk assessments at the assertion level. The practitioner is required to obtain an understanding by inquiry and other procedures of all components of the system of internal control. Procedures are vary in nature and timing and are more extensive than for limited assurance. I point out that substantive procedures are required for risks assessed at the upper end of the spectrum of risk. And also, there's a requirement to consider substantive procedures for all risks that are in the practitioner's judgment material. Again, have a look at paragraphs 139R and 140R in the standard. And the opinion is expressed in a positive form, as it would be in any reasonable assurance engagement like an audit. So that's it for these fundamental differences. Taylor, if we could move on to the next slide, please. There are a number of other fundamental concepts that are relevant when conducting a sustainability assurance engagement. These are interlinked and need to be considered throughout the engagement. All of these are discussed in more detail in Section B of the implementation guide. We encourage you to read those sections, which include some very helpful examples. And if we haven't already mentioned it, we encourage you to refer often to the guide as a resource for further understanding in applying the standard. We're going to talk about professional skepticism a bit more in just a moment, but just to briefly mention a couple of other concepts on this slide. Professional judgment maybe goes without saying that in an involving area like sustainability reporting and assurance, the need for practical experience, coaching, on-the-job training is particularly important in developing the ability to exercise professional judgment. Fraud and NOCLAR, what I will say about that is have a look at Appendix 2 to the guide, which lists the overarching and specific requirements for both fraud and NOCLAR in the standard. Materiality, Josephine mentioned this earlier, so I'm not going to talk any more about that. We won't be discussing today the application of materiality by the practitioner or how materiality may differ between the practitioner and the preparer. That'll be addressed in more detail in the next webinar. Sufficient appropriate evidence, obviously no different from any assurance engagement. The practitioner obtains sufficient appropriate evidence as a basis for the assurance conclusion. And then finally, documentation, point you again to Appendix 1 to the guide, which provides a summary of the documentation requirements in the standard. Next slide, please, Taylor. I mentioned professional skepticism, as is the case for any assurance engagement. ISSA 5000 requires the practitioner to plan and perform the engagement with professional skepticism. The concepts described in the application material in the standard and in the guide are based on ISSA 220 revised, for those of you who are familiar with the IAASB's auditing standards. But the nature of sustainability reporting, including that an entity's systems or processes may be in various stages of maturity, may be subject to varying degrees of oversight by those charged with governance, means that there may be certain unique triggers for heightened professional skepticism or different impediments to the exercise of professional skepticism. And those are listed on the slide. I'm not going to talk about all of them, but just to mention a couple that are unique to sustainability reporting. For example, the complexity of the criteria and their application, pressures on management to meet commitments to achieving sustainability goals, and whether they may in fact be tied to compensation. Or the immaturity of the entity's system of internal controls as it relates to the preparation of sustainability information. Some impediments, many of those that you see on the slide are common to other assurance engagements, but there may be some unique to sustainability assurance. For example, if the criteria permit different ways to measure or evaluate sustainability matters and report information, practitioners may be less willing to accept management's approach, or less willing to challenge management's approach. Sorry. So that's it for professional skepticism. If we could move Taylor to the next slide, please. And we are going to talk in some detail about quality management, but we're going to start with a couple of the fundamental premises underpinning sustainability assurance engagements. Josephine mentioned these earlier, and the two premises are the system of quality management by the firm and the practitioner being subject to robust ethical requirements, including related to independence. And these two premises are stated in paragraph 6 of ISSA 5000. There are two important requirements in the standard itself that further support these fundamental premises. The first is paragraph 30, which requires the engagement leader to be a member of a firm that applies ISQM1, or requirements that an appropriate authority has determined to be at least as demanding as ISQM1. And then the second is paragraph 34, which requires the practitioner to comply with relevant ethical requirements, including those related to independence, that comprise the provisions of the ISSA code related to sustainability assurance engagements, together with national requirements that are more restrictive, or requirements that, again, an appropriate authority has determined to be at least as demanding as those provisions in the ISSA code. So we've introduced a couple of new terms here. Let's explore what we mean by the notion of at least as demanding and the concept of an appropriate authority. First, at least as demanding. The IAASB had a fair amount of discussion about the notion of at least as demanding, and stakeholders and respondents to the exposure draft asked for guidance on this concept, including what it meant for non-accounting assurance practitioners or others that don't follow the ISSA code, and for how the assessment can be done on a consistent basis and by whom. I'd first mention that the concept of at least demanding is not new in the IAASB standards. It already exists in ISAE 3000 revised, as it was amended based on the issuance of the IAASB's quality management standards. It doesn't mean that each requirement in ISQM1 and the IASB code need to have an exact equivalent in other professional requirements or requirements in law or regulation. So what it does mean is, with respect to quality management, the requirements that deal with the firm's responsibilities to design, implement, and operate a system of quality management are at least as demanding as ISQM1 when they address all the matters referred to in paragraphs A69 to A71 in ISSA 5000 and impose obligations on the firm that achieve the aims of the objectives and requirements of ISQM1. Those paragraphs that I mentioned describe, for example, the 8 components of a system of quality management and the principles of the firm's monitoring and remediation process. Now, with respect to relevant ethical requirements, requirements are at least as demanding as the provisions of the ISSA code related to sustainability assurance engagements when they address the matters referred to in paragraphs A58 to A61 of ISSA 5000 and impose obligations that achieve the aims of the requirements set out in the code related to such engagements. Those paragraphs describe, for example, the fundamental principles of ethics and the conceptual framework in the code that an assurance practitioner is required to apply when addressing threats to compliance with the fundamental principles. So the next big question is, who makes this determination that requirements are at least as demanding and what is an appropriate authority? It's important to note that the IAASB was clear that this determination should not be made by the firm. And this was based on concerns that were raised about the consistency with which it would be applied in practice. The notion of an appropriate authority was added to acknowledge the important role of jurisdictional or national regulators and standard setters in this process. And the application material in the standard indicates that an appropriate authority could be a national standard setter, a regulator, or oversight body with responsibility for audit, assurance, or related relevant ethical requirements, or a designated accreditation organization recognized by a public authority. Josephine, you might have an example or two of a public authority when it comes to a designated accreditation organization.
Oh, yes. Yeah, thanks, Dan. So, in the United Kingdom in particular, so we have the United Kingdom Accreditation Service, UCAS, and that's the national accreditation body, and it's established by the UK government. So that is the public authority in that regard as well. And that means that they are able to assess and accredit organizations involved in testing, calibration, and certification. There's another one which I won't try and say in the German, but that's the DAX, the DAKKS, and I'm aware of that. That's actually authorized by the German government as the national accreditation body. So there are quite a few accreditation bodies out there that are recognized by public authority, and some of them, in fact, established by local government or federal government. One of the things, though, it might be worth saying at this stage is because we've got a few questions coming on this, it's not up to us, the ISSB, to determine if a particular standard is at least as demanding as ISQM1. It is, to Dan's point, down to the designated accreditation organization or other national standard setter. Our standards our standard is ISQM1, and so that is what that is our standard that should be applied in terms of ISSA 5000. So we can't really make that assessment whether anything is, similar to or as least as demanding. So it is up to your local or national accredited organizations to do that. Thank you, Dan.
Great. Thank you, Josephine. So let's move on to the next slide, please, Taylor. And we're now going to turn our attention to an engagement level quality management. And we go to the next slide. I'm going to touch briefly on some principles and concepts with respect to engagement resources, and then Claire will take a deeper dive into the responsibilities of the engagement leader and the engagement team. ISSA 5000, look at paragraph 41, requires the engagement leader to determine that sufficient and appropriate resources to perform the engagement are assigned or made available to the engagement team in a timely manner. Engagement resources, of course, can include human, technological, and intellectual resources, as shown on the slide. Given the nature of a sustainability assurance engagement, a range of human resources may need to be engaged to perform the engagement, as shown on the left side of this slide. Josephine mentioned most of these earlier, just in talking about the engagement team and others that may be involved in the engagement. So just a couple of other things to note here. First, I believe Josephine mentioned this, but just to confirm that the definition of engagement team in ISSA 5000 is consistent with that definition in other IAASB standards, and also aligns with the core definition of engagement team in the ISBA code. Next, just a quick word on the concepts of a component practitioner and another practitioner. We're not going to discuss today the concept of components or determining components in a group sustainability assurance engagement or other aspects of planning and performing a group engagement. There will be more on that in the next webinar. So today we're only focusing on who is or is not a member of the engagement team. ISSA 5000 explains that a firm other than the practitioner's firm may be involved in performing the sustainability assurance engagement when the practitioner intends to obtain evidence from using the work of a firm other than the practitioner's firm. The standard requires the engagement leader to determine whether they can be sufficiently and appropriately involved in the work of that other firm. A very key concept Josephine mentioned earlier. And put simply, when the practitioner is able to be sufficiently and appropriately involved in the work of another firm, that firm is a component practitioner. And when the practitioner is not able to be sufficiently and appropriately involved in the work of another firm, that other firm is another practitioner. There's an important distinction in the definition of another practitioner in the standard, which is that the work of another practitioner is performed in the context of a separate engagement. And also, the individuals from another practitioner who perform the work are not members of the engagement team, as they are not performing procedures on the engagement subject to the direction, supervision, and review of the engagement leader or the engagement team. These terms and concepts are important not only to drive you to the relevant requirements in ISSA 5000, but also from the standpoint of complying with applicable provisions of relevant ethical requirements. And in that regard, the IAASB coordinated closely with ISSA to make sure that these concepts were appropriately aligned. And finally, I would point you to the now infamous implementation guide, paragraph 75 to 90, where you will find a very helpful diagram depicting the applicable requirements relating to engagement resources in ISSA 5000 and some additional guidance on scenarios related to using the work of a component practitioner or another practitioner. So that's it from me. Claire, over to you. And you can move to the next slide, Taylor.
Thank you so much, Dan. So earlier, Dan noted that the firm level system of quality management is required to be in place at the practitioner's firm under ISQM 1 or requirements at least as demanding, and it's given us an overview of the resources that are encompassed by quality management at the engagement level. So building on that, I'm going to talk about engagement level quality management, which is covered within ISSA 5000 rather than as a separate standard like ISQM 1 does for the firm. So firstly, I want to highlight some key features of quality management at the engagement level for the engagement leader. Note that the engagement leader is a person appointed by the firm who's responsible for the engagement and its performance and for the assurance report issued on behalf of the firm. Depending on the firm's structure and legal requirements, the engagement leader may be a partner, director, or other senior staff member. They're often referred to, well, in ISQM 1 in particular, the engagement leader is referred to as engagement partner. They may also be required to have a professional regulatory registration or authorization to fulfill this role for the particular engagement, depending on jurisdictional requirements. Note that the practitioner in ISSA 5000 includes the engagement leader and members of the engagement team, and we'll come on to that in a moment, their responsibilities. The engagement leader is used within the standard only when the responsibility is restricted to the leader and cannot be undertaken by a team member solely. Therefore, the engagement leader is required to possess certain characteristics and take on certain responsibilities that are set out in the standard. The engagement leader's characteristics required are set out across the top of this slide, and those include, first of all, key is competence and capabilities in assurance skills and techniques. And this needs to be developed through extensive training and practical application. This cannot be delegated, although, of course, the engagement team will also have some of these skills, but is fundamental to the engagement leader's ability to apply professional judgment and take responsibility for the conclusion on the engagement. So that one's not negotiable. Secondly, the engagement leader requires sustainability competence, and that competence needs to be sufficient to accept responsibility for the conclusions reached on the engagement, but it does not mean the engagement leader needs to be a technical expert on every sustainability topic that's being reported on. However, they need to have enough technical knowledge to ask appropriate questions and evaluate the practitioners' experts' work and to take responsibility for the conclusions reached. How much knowledge competence they'll need in the different areas will depend on the circumstances, such as judgment needed in evaluating the criteria and whether the scope of the engagement is appropriate, the complexity of the sustainability matters. If there's a high degree of measurement uncertainty, they may need more technical expertise in that area, and the prior experience with the sustainability assurance engagements. The third characteristic of an engagement leader is understanding of the relevant ethical requirements that Dan talked about, including independence relevant to the engagement. This is important for the engagement leader to be able to take responsibility for the team's compliance with relevant ethical requirements. So I'll move on to what are the engagement leader's specific responsibilities. So they have overall responsibility for managing and achieving quality, including when they assign work to others in the engagement team. So I'll move clockwise around this diagram, around this circle, starting with the need for the engagement leader to be sufficiently appropriately involved in the work. That means they need to be actively involved in the significant judgments and conclusions reached that need to be made on the engagement. They need to do that throughout the engagement and as a basis for determining whether those significant judgment made and conclusions reached are appropriate. This involvement in the work of the team, including component or practitioners, is necessary even if the design of or performance of procedures, tasks, or actions are assigned to members of the team. Secondly, the engagement leader is required to direct, supervise, and review the team's work. How this is done depends on the firm's policies and procedures, professional standards, and other legal or regulatory requirements, and the nature and circumstance of the engagement and the resources assigned by the firm. Their third responsibility is respect to relevant ethical requirements, in which case they are required to raise the team's awareness of their relevant ethical requirements, evaluate threats to compliance, and remain alert to evidence of breaches and determine appropriate action if there are any breaches. They're also responsible for the engagement resources. So they need to take responsibility for whether there are sufficient and appropriate resources assigned, and if those resources are insufficient or inappropriate, take action to obtain more resources from the firm. In addition, to make sure that those resources are available in a timely manner and used appropriately, as well as making sure the engagement team, practitioners, external experts, and internal audit providing direct assistance collectively have appropriate assurance and sustainability competencies and sufficient time to do the work. And we'll come back on to the engagement team shortly. The engagement leader is responsible for reviewing documentation, including that related to significant matters and judgments on difficult or contentious matters, and all written communications with management, those charged with governance or regulators prior to issuance. Finally, their responsibilities for communication and consultation include communication taking place at appropriate times throughout the engagement, among the team and with others. The team undertaking consultation on difficult, contentious matters and other matters as required by the firm or the leader, and discussion on matters with the engagement quality reviewer if a review is required by the firm's quality management, and finally consideration of information from the firms and network firms monitoring and remediation process. Next slide, please. So now we'll look at the engagement level quality management that applies to the team, the engagement team. Note that these requirements are expressed in the standard as for the practitioner. As I explained before, that encompasses both the engagement leader and the engagement team, those that Dan spoke about as being within the engagement team. So this indicates the use of the term practitioner indicates that these requirements are not restricted to the engagement leader specifically. The engagement level quality management requires the team, the internal and external experts and any internal audit used for direct assistance also to collectively have competence and capabilities and assurance skills and techniques, sustainability competence and sufficient time to do the work. This may require appropriate training, participation in previous sustainability assurance engagement, expertise in IT used by the entity, or knowledge of relevant industries. These collective competencies will very much depend on sustainability information being assured. So there are 6 key responsibilities of the engagement team collectively, and a number of these have been addressed by Dan when he covered the fundamental concepts. I'll touch on each of those and I won't go into detail where they've been covered already. We will also be talking in greater detail about using the work of others in webinar 2 next week. But these are all covered within the system of quality management at the engagement level. So firstly,
Oh, sorry.
Yes, Josephine.
No, I was just reflecting and then thinking about some of the questions that are coming in. I mean, when we were talking about, transitioning from those of us using 3,000 to 5,000, I think what may come across here is this is quite a step up from extant 3,000 in terms of roles and responsibilities of the, the engagement partner, the engagement team.
Yeah, you're absolutely right, Josephine. And many may be observing that for sure. It's definitely is a step up, and that was really deliberate when we were writing the standard. So 5,000, ISSA 5,000 has incorporated elements of ISA 220 revised, which is the audit equivalent of engagement level quality management. And that was primarily to strengthen the quality management aspects of sustainability assurance engagements. And by integrating some of those key principles, ISSA 5000 does ensure that sustainability assurance engagements meet that high standard of quality that we expect, and helps to ensure that these engagements are equivalent to audits or reviews of financial statements, and provides that confidence for users. So thanks for that. Thanks for that, Josephine. So I'll talk about, further about the engagement team then, and what is required for them within the standard. So firstly, when using the work of a practitioner's expert, the engagement team is required to evaluate if the expert has the necessary competence, capabilities, and objectivity, or in the case of internal experts, they'll be subject to the firm's quality management and have to be independent. But this evaluation may include considering their qualifications, experience, technical standards applied, and whether they're subject to a system of quality management within their own firm. For external experts, the practitioner considers the relevant ethical requirements relating to those experts, such as those contained in the IAASB code, such as confirmation of financial interests and relationships, whether safeguards are in place and so forth. If the expert does not have the necessary competence, capabilities, or threats to objectivity cannot be eliminated, or there aren't sufficient safeguards in place to reduce those threats to an acceptable level, the practitioner may be unable to use the expert's work. So it's not just a case of finding out those things, it's actually a case of acting on the information that you find. So determining and agreeing the nature, scope, and objectives of their work is part of the practitioner or the engagement team's responsibilities. Evaluating the adequacy of that work, including its relevance and reasonableness of the expert's findings and consistency with other evidence. relevance and reasonableness of assumptions and methods used, and the relevance, completeness, and accuracy of that source, any source data they've used. The extent of this work will depend on the factors such as the significance of the work, the risks of material misstatement related to the information, and previous experience of their work. So just taking a practitioner's work at face value is generally not sufficient. Other work needs to be done by the engagement team. This, separately, when using the work of internal audit function, now I know this is not allowed in all jurisdictions, but if direct assistance is permitted, the practitioner needs to evaluate the internal audit function's objectivity, based, for example, on their organisational status within the entity, the competence in sustainability matters and applicable criteria, for example, the system of quality control, including that they apply or applies to them, including whether that includes application of a systematic and disciplined approach, and whether the work is adequate for the practitioner's purposes. So now I'll move on to the second responsibility, which is applying assurance skills and techniques. And suffice to say that this is part of an iterative, systematic, systematic engagement process and is required collectively for the engagement team. Thirdly, they're required to comply with relevant ethical standards, and Dan already went into that. Thirdly, to apply professional skepticism, again, which Dan explained in the fundamental concepts, and it underpins the conduct of the assurance engagement throughout. For example, in recognising that sustainable information may be materially misstated. And obviously that's a core objective. So fifth area of responsibility is the exercise of professional judgment. So this is both in planning and performing the engagement, and in determining the nature, timing, and extent of procedures. It's a fundamental concept that underpins the conduct of any assurance engagement. And finally, the responsibility of the engagement team includes using the work of another practitioner. Again, Dan provided us an explanation about another practitioner, and there's a number of factors in using the work of another practitioner to obtain evidence that we'll cover in more depth in webinar 2, but just broadly, the engagement team are required to ensure that another practitioners comply with relevant ethical, the practitioners that comply with the relevant ethical requirements in using that work. They evaluate whether another practitioner have the necessary competence and capabilities, whether the nature, scope, and objectives of that work are appropriate for the practitioner's purposes, and if the evidence obtained is adequate for the practitioner's purposes. So we'll now move on to the next slide, please. I'll now talk about accepting a sustainability insurance engagement. So we understand the fundamental principles and concepts, but how does this play out in accepting an engagement? Next slide, please. So this diagram shows the basic steps that are undertaken for accepting or continuing assurance engagement on sustainability information, and ties closely into the foundational concepts that we just covered. So firstly, the firm has to have that system of quality management in place prior to seeking to be engaged to conduct an assurance engagement under 5,000. And whether that's applying ISSA or requirements at least as demanding, it needs to be in place because it does take time to implement. It impacts the entire engagement, needs to be in place to apply 5,000, so would be the first step. Secondly, once a potential client or engagement has been identified prior to seeking appointment, the firm needs to be sure they expect to satisfy relevant ethical requirements, including independence. That is, the practitioner has no reason to believe that relevant ethical requirements, including independence, will not be satisfied. So once, of course, the engagement is accepted, then the relevant ethical requirements will need to be actually satisfied, and more information will need to be gathered to ascertain that they are. The third step is the engagement team and others who are to conduct the engagement collectively have the appropriate competence, capabilities, and time to do so. If these matters are in place, the firm will usually need to access the entity's personnel in order to establish whether the preconditions are present. As a basis for the preconditions, the practitioner obtains a preliminary knowledge of the engagement circumstances, and we're going to talk about this in just a moment. And the final step is agreeing the terms of engagement, and we'll also come back to that. Next slide, please. This slide provides details of the first 4 preconditions that need to be in place in order to accept or continue an engagement. The work effort, as I mentioned, is limited to the preliminary knowledge of the engagement circumstances and discussion with the appropriate parties. Feedback on the exposure draft of ISSA 5000 included concerns that the extent of knowledge required may be too onerous prior to acceptance or continuance of an engagement. So we very much sought to clarify in the final standard with application material that the practitioner uses professional judgment to determine the nature and extent of the preliminary knowledge needed, and also noted that it ordinarily differs in nature and is less in extent than the understanding obtained when performing the engagement. So the initial engagements may be more likely to require additional work and will be more onerous than continuing engagements. As you know, with continuing engagements, that understanding will already have been obtained and can be topped up in subsequent years. The engagements, yes.
I was just going to interject as well here, and of course the purpose. It's important to clarify the purpose of the work done at this stage is, of course, to protect the quality of the engagement from the outset. But again, on the face of it, our participants may feel there's an awful lot to do here, and when you look at this list, and the engagement won't have started yet.
Yes, so it does seem like a really long list, and when I go through the next slide as well, it might look very onerous, but that's why we very much have tried to put those limits in place, if you will. So that the procedures are limited to that preliminary knowledge, the discussion with appropriate parties, and increasingly we're seeing sustainability information will be prepared under a recognised framework that's subject to a transparent due process, so such as GRI or ISSB standards or regulatory requirements. And in that case, the standard is clear that the criteria can be presumed to be suitable in that case. So the whole process of going through all of the characteristics of suitable criteria that I'm going to mention in a moment won't be necessary in that case. So it's not
so like the ESRSs and of course IFRS S1, S2, as you say, and as we said earlier, because they obviously have gone through a fully transparent due process, then they are deemed to be suitable.
Yes, that exactly. So that relieves the practitioner of worrying about going through that whole process when it's already been done for them, but in establishing that framework. So yeah, and as I mentioned earlier, there still is, of course, in more complex engagement, there is going to be some level of work effort sufficient to satisfy the practitioner that it's appropriate to take on that engagement. So I'll just step through, briefly what those requirements are, and to just underline again, as Josephine was pointing to, that there is it's less work effort than what you would do once you've accepted an engagement in the risk assessment process, and that's when the practitioner will come back to the suitability of criteria and so forth, and revisit that and make sure that they're fully satisfied and when they've got access to complete information. So I note that in terms of, well, what is preliminary knowledge that's required, I just wanted to touch on the types of things that includes. It's very much around that broad context of the particular insurance engagement. So the preliminary knowledge, is likely to encompass things like the terms of engagement that will come to, the scope of the engagement, whether it's reasonable limited assurance, the characteristics of sustainability matters that Dan was speaking about, the applicable criteria that have been used, the information of intended users, the information needs of intended users, and the relevant characteristics of the entity and its reporting boundary, the characteristics of the engagement's management, those charged with governance, that may have a significant effect on the engagement. And these are the sorts of things that a practitioner is going to want to know when they're deciding whether to accept the engagement. So the first of the 7 preconditions is on this slide, and will need to be met when accepting an assurance engagement. So firstly, the practitioner is required to consider if the entity has a process to identify the sustainability information to be reported. So it doesn't mean that that it needs a process. It considers whether there is a process. Now, a process to identify sustainability information to be reported, that will include identification and selection of the sustainability matters and the reporting boundary, may be required by the framework or the entity development criteria. And it will involve the application of materiality and identifying which information is relevant to the information needs of intended users. Whilst the absence of a process, unless it's required by the framework, does not prevent acceptance of the engagement, the absence of a process may indicate a lack of a reasonable basis for preparing the sustainability information, particularly if the framework or criteria are not prescriptive about which of the disclosures are to be made. Look, I point you all to the standard Appendix 2, which illustrates how that process is considered throughout the engagement. The second precondition is that the roles and responsibilities are suitable, and that involves evaluating whether management or those charged with governance and the engaging parties' roles are suitable in the circumstances. The third precondition is whether management or those charged with governance of the entity have a reasonable basis for the sustainability information. And I mentioned that the process will help provide some of that confidence, but overall it requires whether there's controls and systems in place to enable preparation of the sustainability information that is free from material misstatement. Now, bear in mind, this is at a very high level, because obviously the engagement will go down into detail into the controls and so forth. The fourth precondition is whether the sustainability matters within the scope of the engagement are appropriate. So whether they're identifiable, capable of consistent measurement or evaluation against the applicable criteria, such that the resulting sustainability information can be subjected to procedures for obtaining sufficient appropriate evidence. Next slide, please. So the further 3 preconditions are, excuse me, is the requirement for the practitioner to evaluate whether the criteria are suitable for the engagement circumstances and will be available to intended users. Excuse me. Now, I mentioned earlier the characteristics of suitable criteria, and these will need to be looked at if, excuse me, if the engagement, if the criteria are not presumed to be suitable. So the criteria will need to be relevant, complete, reliable, neutral, and understandable. Oh, I'm so sorry, I'm coughing. So I'll move on now to the 6th precondition. which is that the practitioner will expect to be able to obtain the evidence needed and will be providing a written assurance report. So the availability of evidence will be impacted by the timing of the engagement, whether there'll be access to records, documentation, and other information. Evidence located at organisations within the value chain, but not controlled by the entity outside of the reporting entity's control. So access to that evidence. Availability and accessibility to evidence needed is the same. Apologies. Regardless of the level of assurance, so whether it's limited assurance or reasonable assurance. So although limited assurance has more limited procedures, if the practitioner becomes aware of a matter that indicates a misstatement, that will necessitate a deep dive or additional procedures. So there needs to be that availability in order to do that deep dive when necessary. The seventh precondition is rational purpose. So whilst engagements under law or regulation can be presumed to have a rational purpose, similar to the criteria being presumed to be suitable. Otherwise, determining whether the engagement has a rational purpose includes, in a limited assurance engagement, whether the practitioner expects to be able to obtain a meaningful level of assurance that's likely to enhance intended users' confidence about the sustainability information to a degree that is clearly more than inconsequential. The engagement as a whole will be useful and not misleading to intended users. And the scope of the assurance engagement is appropriate, including when the scope of the engagement excludes part of the sustainability information to be reported. Next slide, please. Apologies for the coughing.
Do you want me to pick up this slide, Claire? Because I know you.
Perhaps that would be better. It's probably bothering everyone listening to me.
It's
coughing.
a very,
Thanks
very
so
brief
much.
one. Yeah, no, it's very brief
Thanks
one.
so much, Josephine.
No, I mean, it's we all know, everybody probably on this, how difficult it is when you've got such a bad cold. So we appreciate everything so far. Well done. So basically, I mean, it's a pretty easy tree here that we can see, a decision tree that we can see here. And what you could probably do is look at paragraph 76 to 80, which is the preconditions. But look in the implementation guidance. There's a lot of good, helpful stuff in there in paragraphs 160 to 201. So make a note of those. But essentially, at the end of the day, are the preconditions present? No. So have a discussion with management. You know, maybe something isn't obvious, maybe to the practitioner at the time while they're having those conversations. Can changes be made to improve the situation? Then if so, you go through the process and you should be able to agree the terms of engagement. But in a lot of circumstances, you will find that, you know, for example, the criteria is not based on a framework that's known to everybody, and it's vague, and there's no real objective measurement or evaluation that you can see there. And so in which case a suitable criteria is not acceptable in those circumstances, then you really just don't have the basis to continue the engagement. So if you can't actually make those changes, then acceptance is not permitted. Although there are some situations, and we have this in our auditing standards as well, where you may be obliged to continue the engagement nonetheless, because it's required by a particular piece of legislation or regulation, and in which case you'd have to think about the impact of that on your conclusion at the end of the day. So thank you, Taylor. If we move to the next slide. So actually it's back to me, so that's quite handy. So what's coming up next? If we could have the next slide, please. Thank you. Okay, so I did mention earlier we have 2 other webinars in a series, but also the recording of this webinar will be available to you as well as the slides. We've got webinar 2, engagement planning, risk assessment and response. And that will run on the 7th and 8th of October. And then we've got the concluding and reporting, which will run on the 14th and 15th of October. So please remember to sign up. We really appreciate your participation. If we could look to the next slide. Thank you. So this is just a reminder of some of the key material and resources that we have available. If you literally type IAASB and you get onto our website, in that top right-hand corner of our website, there's a link to all of our sustainability assurance resources, and you know, we're adding all the time. And then if we finally go to the next slide, yes, and then we're down to the questions. And so Dan and Claire, we've got about 15 minutes left. If you could both join me, Claire, don't worry if you're still not feeling great. And I'm just going to cover some of the questions that we got earlier that we didn't get to answer during the webinar. So you will have seen my head moving back and forth, everybody. I was trying to support Kazuko and Sylvia and Susan in responding to all of your great questions. So we appreciate those. Dan, though, one I thought others might want to hear about. One came through that said that for certain jurisdictions, they adopt just certain aspects of ISSB sustainability reporting standards. So you might see one jurisdiction just looking for S1 or S2. But in this case, when we perform assurance on these subject matter information, can we still conclude it's a fair presentation or it's compliance with fair presentation?
Okay, yeah, thanks, Josephine. It's a very good question. And I think what we should say today is that it's being further discussed. I think there are different points of view on this. There's certainly a point of view that says that if the underlying framework is considered to be a fair presentation framework, then a presentation of selected information or certain aspects of that required information also would be considered fair presentation, but there are different points of view. So I think stay tuned on this one, and the IAASB and staff will be giving that one further consideration. Hopefully we can provide some additional guidance or information in the form of an FAQ or some other type of guidance.
Yeah, I agree with that. Thank you, Dan. And yes, there are different views. So yes, we're just trying to get to a good place to support practitioners. Another one, slightly different, but again on IFRS S1 and S2 is very popular today. These standards don't require disclosure of topics any longer, unlike, say, GRI or ESRS's CSRD. The participant asked the question, may I know how that will apply on the area of sustainability information about an aspect of a topic? I think this one, Dan, is about what we mean by topics and aspects of topics.
Yeah, it would seem so, Josephine. And again, a good question. I mentioned earlier that yeah, topics and aspects of topics were just terms that were used by the IAASB in the standard as a way to help to think about broad categories of information, sustainability matters, topics such as under the broad categories of environmental or social or governance. So under environmental, a broad category like climate or biodiversity. Whereas aspects of topics was intended to be a bit more granular in terms of the specific information that is being disclosed. All of that I mentioned was going to be driven by the framework, and the framework, whether it's S1, S2, or ESRS, or any other framework, GRI we're going to use different terms for these categories of information, but the concept of a disclosure is information about a particular quote unquote aspect of sustainability. So it's the information that's being disclosed that is subject to assurance. So
Yeah.
it's a matter of looking at the framework and kind of thinking about the specific information that's being disclosed, how it's being disclosed. And that's the concept of a disclosure. And maybe we'll leave it at that for today, Josephine, because the topic of disclosures and how the practitioner views disclosures in terms of planning and performing the engagement, including for assessing risks of material misstatement and performing procedures, will be covered in a little bit more detail next week, including the notion of grouping of disclosures. So um, would say, tune into that webinar for sure, and maybe that will help to shed a little bit more light on that particular question.
Yeah, that's actually a good point as well, because I think, as we move into webinar 2 and webinar 3, we'll probably have some more, practical examples as well to share. Whereas this is really dealing with this webinar is really focusing on our foundational concepts. So that's really helpful, Dan. Thank you. One of the questions that came through, there's a few that came through, I'll just pick up on very quickly. Are there any recommended qualifications or professional certificates that may be considered appropriate? Well, the IAASB, in any of our standards, we don't mandate specific professional qualifications. They're usually determined locally through law, regulation, or your professional bodies, and often with third country arrangements in place. But ultimately, the engagement leader is required to have the competence and capability in assurance skills and techniques, and that is actually required to be developed through extensive training and practical application, of course, and of course they need competence in sustainability information, and there is quite a little. Those requirements are in the standard, and there's also some guidance in the application material on that as well. And then another question that came through was, could we ask about details on the official process for interested countries to adopt 5,000? Again, it's one of those things. It's not really down to us at the IAASB, but we're always available to support national standard setters, the relevant government body that's responsible for onboarding standards in their own country in any way that's necessary in terms of doing webinars as we're doing today, FAQs, guidance, and so forth. But we don't have ourselves an official process. Claire, I've got a couple of questions that came through, which I think might send across to you if you don't mind. One of the questions that came through was, in applying 5,000 and performing sustainability assurance engagements, to what extent should a firm's existing system of quality management be updated?
Yeah, thanks, Josephine. I saw that one, and ISQM1 is principles based, and it for firms that already have a system of quality management under ISQM1 in place, that will serve ISSA 5000 very well. That said, the specific aspects, relating to the competence and capabilities, for example, of the practitioners, will obviously need to be adjusted for those engagements. So, that there may be changes within the firm that are needed to be able to put themselves in a position to meet ISQM1 and then the engagement level quality management before looking for accepting those engagements. But ISQM1 is not intended to be amended in any way to besides the small amount of conforming amendments when we issued ISSA 5000, because it is principles based.
Thank you, Claire. I also got another request to just quick, maybe briefly again explain what we mean by use the work of another practitioner or a practitioner's expert.
Sure. So using the work of, so that it doesn't mean that no additional work needs to be done. So if you, for example, another practitioner may have issued an assurance report at, say, a value chain entity that's within the reporting boundaries of the sustainability information reported, and that the practitioner will need to assess the relevance to the engagement, whether there's evidence that it can draw from that, and it may well need to do additional procedures to provide support, to provide further evidence to support that that another practitioner's report. I mean, a good example, I think, is also like when using the work of an expert, is the additional information that I mentioned when I was presenting, that you might need to look at the assumptions used, the data underpinning that. So there may be additional work in order to assess the evidence, the sufficiency and appropriateness of the evidence from that other other party.
Thank you. There's one here that it's really probably for webinar 2, both Claire and Dan, and that one of our participants has said that this has been issued as a comprehensive standalone standard. Unlike COSO's ERM or internal control frameworks, it does not embed risk management as an integral component. Now, potentially the practitioner is looking at this standard from a different lens. This is a standard on an assurance engagement of the entity's sustainability information. So the entity itself would have adopted COSO, ERM, or an internal control framework. But in terms, and as part of COSO, an entity would have a risk management as part of their components. As far as I recall, though, we do actually, in terms of understanding the entity and the environment, we do consider the entity's risk assessment process, do we not?
Yes.
Yeah. Okay.
Yes,
so,
indeed. So
yeah. So we do focus on that. And in fact, even in our the way maybe to think about it differently, and maybe this is one for you, Dan, is that, you know, when we're thinking about, as assurance practitioners, us applying COSO, that's really about our our quality management system.
Yeah, that would be right, Josephine.
Yeah. Okay. Perfect. Thank you. And then I think we're probably now at the end of our webinar. I would just like to extend my thanks to Claire, Dan, Kazuko, Sylvia, Taylor, and Susan, who've all been working very hard in the background. We're wishing Claire, obviously, a quick recovery. Sorry that you had to join us with such a bad flu. But thank you, everybody, for all your questions. It was great. We got a number of questions in. We haven't answered them all. I did promise at the end we will still collect all of these and see how we can best respond to them. There is another webinar tomorrow covering the same topic. So if you didn't catch something and you really thoroughly enjoyed it, then join us again. And hopefully then you'll hear some of the answers to the questions that came up that we didn't answer today. But anyway, thanks again, everybody. We really do appreciate your participation, and hopefully we will see you all at the next webinar.